Welcome, everyone. My guest today is Cecelia Raine, Vice President of Servicing Innovation and Engagement at Freddie Mac, to talk about Freddie Mac's vision for servicing and how it's using technology to enhance the customer experience. Cecelia, welcome to the podcast.
Thank you. Thank you so much, Sarah.
Yeah, I'm so excited to have you on. So let's talk a little bit. So Freddie Mac announced the retirement of a legacy platform in December. So what led to this decision, and what can users expect after they've transitioned to the new platform?
Sure. So we've been working toward the legacy retirement of Workout Prospector for several years. So we're excited about the platform that has replaced that. And it's gone beyond replacement. We've brought innovation to the market with Resolve. And what that means is we now look ahead. We actually will fully retire Workout Prospector, which we refer to as WP. A piece of that was Bypass, which was retired over the summer. And so it's a 20 plus year tool that served us very well, but it was built on platforms that maybe no longer will be supported in the future, or we now have new innovative processes and policies. And so we're excited to close that chapter and move ahead with Resolve, which we've been building upon the last few years. And what users can expect really is more innovation, more streamlining and automation, and an improved experience for servicers, employees in loss mitigation. We're going to be building on that in foreclosure and bankruptcy. We've changed the game there, and so we're looking forward to what's to come.
It's such a big deal, right? I mean, things have changed so much, and being able to respond to that change in a timely manner, it's hard for super large companies doing really important things. But let's talk about the journey of reimagining your servicing platform. What were some of the key drivers or milestones that marked the transformation?
Sure. So the drivers were really Freddie Mac's leadership recognizing that it was time to invest in servicing tools and platforms. Like I said before, there were many platforms that have served us well over the years, but things have changed and we have new underlying modern tools and platforms internally that we're building upon. And also at the time, several years ago, when we were thinking about all of this, the economy was strong, delinquency rates were low, and that's always a good time to invest. When you don't have the scale and the volume, you can actually focus on what can we do to make things better. So the drivers were really the acknowledgement by our leadership that we needed to make investments in the servicing and default space. And I think that, what Reimagine actually was taking a step back and rethinking how do we, as the investor and with our mission, with homeowners at the center, how do we relook at that? And we went to our servicing partners, to the community, and said, what do you see needs to be changed? We compared that with what we saw internally, and we created a roadmap that allowed us to make incremental change over the last 4 years that it makes a difference. We have platforms now that are there we can build on, and that's what's coming the next few years is how do we take what we've done and move that into the future and build upon that?
How did something like COVID really change the equation here? Because, before that, servicing kind of went along on a roadmap that everybody was very used to. And then overnight, almost, things had to change and things did change. Things were able to change. So how did COVID really inform maybe this next iteration of what you guys are doing?
Mm-hmm. So what any crisis does is it forces change that maybe you didn't think about or you were considering, but you had no choice but to put that change in place. So the forethought of the leaders to invest during the times when the economy was strong, volumes were low in the default space. And so we were always looking to ready ourselves for a crisis, not thinking the crisis would be around the corner. We launched in February of 2020. We had been planning in 2019. And then in March 2020, COVID hit. And so we were already thinking about these investments. We had already developed prototypes and looked at what the platforms would be. But then, in, I would say, recognition of the servicers also understanding they had their own changes and to their credit, they had invested in self-service borrower portals and ways for borrowers to self-serve. And through having APIs and Resolve and other things that we're doing, you can have real-time decisions. And they connected all those tools to their existing self-service portals. And then because volumes increased so drastically overnight, there had to be a way to, you can imagine customer service teams, and they couldn't handle that kind of volume. So because they had the wherewithal and it had invested in those tools, we learned a lot in a very short period of time on the power of self-service tools and mobile tools, and connecting all of the business rules and the technology to that in order to serve ultimately the homeowner.
So you mentioned several times that, taking advantage of the climate that we were in, right, from an economic standpoint, from like a lower volume of delinquencies, things like that. It's what you always hear from the technologists are like, we hope during this time people are, going to use this time to get better. It so rarely happens, though. So it's quite a story to highlight the leadership, to recognize that this is the moment, this is when we can do this.
And that really takes the entire ecosystem. If we as Freddie Mac were interested in that, we couldn't do it alone because we're connecting to the platforms and tools. And there's many different tools and options that our servicers leverage. And so we needed to create tools and capabilities that could connect to all of those. And we engaged all of the players that we knew without them and without them coming on this reimagined journey with us, we certainly couldn't get it done. So I think that the industry was ripe for innovation and for change. So it was good timing. And also our leaders went out and engaged with the leaders of the servicers and asked them, can you do this with us? What are the resources? What's the capacity? And we work together on the roadmaps. We understand that servicers face regulatory changes across the board, not just Freddie Mac, but all that they deal with federally and state, local, other investors. And so I think not only did we consider that volumes were low, but what else are you facing, and how can we time things that were meaningful to them? How can we bring change management that actually brought value to them also? So we did this together, and really it was a collaborative effort. And you do have to listen. Sometimes we had an idea of something as Freddie Mac that we wanted done, and it was very important to us, to our investors, to our mission. And we had to intake all that information and make good decisions about how to roll things out. And also we learned from each other. We had an early adoption model, which allowed us to go small, understand how things are going, make tweaks before we went broader with full industry adoption. So those are all things that we did together, and we listened, and we don't always get everything 100% right. We strive for excellence, but we know perfection is not something that you can always have, but you can certainly strive for that. And that's what we try to do. And if we don't get it right, we need to listen and pivot. And hopefully, if you talk to servicers and their business partners, that's the experience they've had with us.
I love that. That's a top line UX right there, understanding how to do this. Let's talk about the 3 most impactful new technologies that are integrated into the platform and how they're going to enhance consumer experience.
So in Reimagine Servicing, it's not just Resolve. So we actually deployed other tools with our mortgage insurance partners in the mortgage insurance reconciliation space and in the claims space, where we work with them. That doesn't have a direct impact on homeowners, but it has a direct impact on us, on Freddie Mac, on our partners. And we also deployed tools in our expense reimbursement space, and we worked hard to elevate our loan level reporting experience. So across the board, we use new UI experiences, that's user interface. So we listened, what are the most modern tools we can leverage when you have a user experience? And we had consistency across those tools. So if you're using a Freddie Mac tool in one area, it should feel, the user experience should feel and look very similar no matter where you're touching us. And so that's something that we deployed. Also, APIs, which is the use of direct integration into servicers' existing tools, and that allows for real-time communication back and forth. That was very new. We'd never done APIs in Freddie Mac and servicing before outside the company. We now have 8 APIs across our Total MI and our Resolve experience, and we have 56 servicers that are live on our API. Over 90% of all decisions that come through are coming through in real time. So APIs were a game changer for us. We continue to build on that. And so I just feel as though the most important tools are the data that we now have, the APIs, and the user experience. And we built all these things on modern platforms. So our technology leaders also understood that in order to innovate, you have to invest in the behind the scenes platforms. And we've done that. We talked about the retirement of WP and Bypass, but there's numerous legacy tools we've been able to retire, both internally and external facing. And you have to do that if you're investing all this time and money and energy in innovation. You have to then retire the legacy tools that have served their time and now are being replaced.
I think servicing, the complication comes in the fact that every consumer is different and how they want to be contacted and how they need to, what looks like success in their particular case. So maybe you could talk about how does this, how the new platform really helps servicers still offer that in whatever way the consumer wants.
Yes. And our servicers they've learned so much over the last 5 years. They're really great at offering all those different options. There has to be optionality, and it has to be based on what is good for that homeowner and that borrower. What is their experience? Do they want to self-serve? Do they want to call a contact center? Do they want to talk via email? Do they want to be able to leverage mobile or web? And so they're very good at understanding that and deploying that to those borrowers, but there always has to be an option to be able to speak to someone. They have to offer that. They have to have those manned call centers, because there are times where you have a borrower who simply wants to speak to someone. They may have gone with other alternatives, but they feel like because of a hardship or something they don't understand, they have to be able to chat with someone in a live chat, or they have to be able to speak to someone. So you have to offer all of those alternatives. And I think the most important thing about self-service is it's 24/7. And we need to offer that because homeowners are consumers in so many other areas in their life, and they are offered those options and sometimes 100% self-service and as consumers in other areas. And we need to also offer that. And you have to have the tools, platforms, and the modern technology to be able to do that. So we're moving more and more toward that. And I think we have to if we're going to keep up. And I think some of the best practices out there understand that these servicers who are deploying this understand if a borrower needs to reach them and get a decision on a weekend when they don't happen to have an open call center, they have to offer that.
I think that's such a great point. We can be in silos or whatever in the mortgage industry and servicing and whatever part of the housing industry you're in, that at the end of the day, the consumer is experiencing a different experience. They have a consumer experience with Amazon or with DoorDash. We're very familiar with that, but like delivering that with all of the constraints that we have to operate in our industry is the challenge.
Yes. And we get compared to the Amazon type experience, right? We are not Amazon. This is people's homes. This is where their family resides. This is their safe space. That's what our mission is about, is home possible for all. And so the most important thing is when they need us, you need to be there. And also the experience of the employees at the servicers, right? When you have satisfied, happy employees who are having a great experience with the tools and they don't have frustration, they serve that homeowner so much better. And so the benefits, when we look at benefits, we look at not only the homeowner and their experience, but the employees at the servicers. Are they can they get to the meat of an issue with a homeowner in a very short period of time and spend quality time with them? And our own employees, a lot of the platforms that we've deployed are also our operating platforms, and it has to serve them as well. So this is why we deploy things incrementally, and we consider everyone in the ecosystem and what are the benefits to all of us. Otherwise, why are we deploying something if it's only serving a very small constituent? We really look at who is this serving and where are the benefits being derived the way that we intended, and then pivot if we don't. So we have a good experience for the homeowner, for the servicer, and for Freddie Mac.
There's so many customers in that chain, right? Like, so there's the homeowner which is the customer of the servicer, but then the servicers are your customers. Yeah. I mean, there's all these things to take into consideration there.
Yeah, and you can't forget the investors,
right?
Who we are serving. We couldn't do things without our investors, and we have to have the benefits that are derived of the investments that we make in our platforms. And also, I would be remiss if I didn't mention the technical and business partners who have helped enable everything that we're trying to do. So many times the servicers have existing business partners and technology providers, and we work very closely with them in order to enable. They helped work with us to develop and deploy our first APIs. They go through all of the testing with us and give us feedback on what's working, and their expertise as well. They know their servicing partners very well. So it really is all of us. We have to listen to each other, and we have to take that back. And sometimes we may be thinking about what's good for us, and we have to. I work for Freddie Mac. That has to be my priority. But at the same time, in order for adoption to occur and have it be the best experience, you have to consider all of that.
Let's zoom out a little bit and talk about the mortgage servicing industry as a whole. And I'd love to ask you, from Freddie Mac's perspective, where do we see the mortgage servicing industry headed as a whole? And then how is Freddie Mac positioning itself to lead or adapt to these changes we see coming?
That's a big question. And I would say from my perspective, my vantage point is servicing innovation and engagement. And I support our business leaders and business drivers and all of the goals we have. And I would say as an industry, we are, number one, trying to provide housing for those who don't have it, the right housing for families across the country, right? That is our mission, and anyone working with us knows that. And so if we think about servicing in that equation, we have to have the experience from the day the loan is delivered as a Freddie Mac loan all the way through that life cycle, which could be, there are some homeowners who never touch, they just never have to call. They always make their payment. They don't have to contact their servicer. They have auto payments set up. If they have a question, they can go to a self-service portal. No matter what that touches with the servicer, it has to be a positive experience. And so I think where we're headed as an industry is, how do we elevate self-service? How do we have tools that allow for decisions in real time? And how do we exchange data about that singular homeowner that we're all serving in a way that elevates the ecosystem? So helps us all make better decisions. What should our investments be? And how can we serve them in the best way possible? So as an industry, that's what I hear. I also, simplifying things for the servicing community. They ask about that all the time. How can you make it easier for us to adopt your policies, to understand all of those policies? How can we not have competition with other investors? What can we do to work together to align? And where we can do that, we will. And where we have to separate ourselves, we will do that, and we'll communicate it. And I think that's real where we're headed as an industry, is simplification, automation, and modernize how we use data for the benefit of not only the entire ecosystem, but ultimately the homeowner, that they drive everything we do.
I think that's so interesting. And also, as the vice president of servicing innovation, right, and engagement, it's not like this is okay, let me dip into this and solve this one problem, right? When I think about how Freddie Mac is positioning itself to lead here, it's like it's an ongoing conversation. It's an ongoing quest, because it's not like, oh, okay, the check, we're checking that box. No, we've been innovative,
Well, we pride ourselves in thinking about that and doing that. And you sometimes change can only happen if you do it incrementally. And then you start to see the broader impact and the positive impact over time. And don't get me wrong, you have to track it. You have to be disciplined about what we deployed. Was it worthwhile? If it was, do we build on it? If it wasn't, how do we have to change that? That takes collaboration and communication. And if you think about where we're headed and what Freddie Mac does. So I just went on a listening tour with our new head of servicing earlier this year. Mike Reynolds was named the head of servicing. He began in January. And so he has inherited the Reimagined Servicing program. And so he went on his own listening tour to listen, and that's ongoing. So we're not just going off of information that leaders talk to servicing C-suite and leaders the last couple of years. It's all the time. He went out and went to them and sat in front of them and listened to what is important, and then asked us to build that into our plan. So what was important to servicers 5 years ago and 4 years ago and 3 years ago, it changes, and we have to listen to that. We have to collaborate with them. And it's not just about technology either. There's process change that has to happen. There are policy updates that happen. It's across the board. It's people, process, technology. It really is all of it. You can't just deploy new tools and keep old processes. You have to have that change management exercise to take advantage of all those investments you've made.
You've talked several times about collaboration. So I'd like to dig in a little bit there about the importance of partnering with Freddie Mac. What does that look like for the people who partner with you? What does that partnership look like?
So it can be a little different for different people. I think it depends on your relationship with us, but we don't discriminate against partners. We open up, for example, Resolve. Anyone who has an integration with any of our servicers is welcome to come to us and work with us to develop the APIs and test and integrate. It doesn't matter if you do 10 API calls a month or you do 10,000. And so we will offer it to anyone. We'll work with any team. And if you don't happen to have a technology team that can support that, we will partner with the businesses that maybe medium and smaller servicers who use our user interface, the UI for Resolve. So we knew we had to come to the market with options for all of our partners because not all the partners are the same. And so that's really important. Also, if there's new technology or emerging tech, we stay on top of that. My team monitors who's entering the industry, who's partnering already with our partners, so we understand how it all connects. And we have a business partner roundtable where we actually partner with the business tech providers for our servicers. So we know what's important to them. We're listening to, this is what the servicers are telling them. And then this is what we're hearing from the servicers, and how do we marry that? And so there's many ways to partner with us. You can reach out to me. You can look at FreddieMac.com. We have all kinds of resources available, and we have a team of people that would be happy to answer questions or how can we partner with you more. We do have some strategic partners who do a lot of business with us in servicing, and they continue to be committed to it. We meet with them regularly, and that's how we continue to learn, because they're out in the field. They're handling these homeowners every day.
What do you think some of the advantages are for people who partner with Freddie Mac? Like, what at that higher level, what does that look like?
So it depends on if it's a servicer partnering with us, if it's a mortgage insurance company or a tech provider. But let's just take, for example, the mortgage insurance companies. We were able to take a process that was manual, using Excel spreadsheets. It took a couple weeks to reconcile tri-party. So you have the servicer, the mortgage insurance company, and Freddie Mac. And through developing APIs and working together and having them adopt that, we took a 3 week or so process down to less than a few hours. And so
Wow.
right there, that's a benefit for them, a benefit for us and for the servicer. So it's streamlining, it's being cost effective, and frees up your team to think about more things and have big ideas. If you're a servicer, the benefits are things like the borrower's experience is improved. You have a decision now in seconds instead of having to wait a couple days or even longer on a loss mit decision. You can, if you have a SPOC, a loss mitigator who's on the phone with the borrower, or they're self-serving, they can get an answer immediately versus in the past, there was a long turn time. So right there, those kinds of benefits. And if you're a business partner, it benefits you to say that you successfully integrated with Freddie Mac and Resolve, and people know that you've made that investment and that you are thinking about the future. So there's qualitative benefits and there's quantitative benefits. There's cost savings and there's elevates your reputation, and our benefit is we learn from them and we understand and prioritize what's important, and then we take that to the market, and we have very, very high adoption rates for tools that are meaningful to us. So that's a great benefit to Freddie Mac.
No, thanks for fleshing that out. I think there's a lot there. My last question is, Freddie Mac is moving toward post-purchase education for borrowers and homeowners. So I think that's really interesting. How do you envision that initiative impacting the industry, and why is it a priority for you guys?
So it's a priority because homeowners are at the center of everything we do. And there's a lot of borrower and homeowner education that happens at the origination of a loan. And then you might not see a lot of education or counseling occurring until a hardship happens or there's a disaster strikes. And the industry has stepped up, and there's thousands of counselors who do amazing work. The goal that we have is to expand that and start sooner with that education. After a loan is delivered, you can imagine someone's getting their keys, they've closed, they're so excited, they're moving into their new home, and that's what they're thinking about, and that's what they're focused on. So not long after that, we would like to begin engaging with the homeowner and educate them on numerous things. What if your loan was ever transferred in the future? What does that look like? What should you expect? If you were to face a hardship, you had something happen, whether it's unemployment or other hardships that happen every day to people. What do you do? Who do you reach out to? How can you serve yourself? What can you have ready and available to have decisions happen quicker? And there's also the opportunity to teach people more about where to go and what's going to happen in the life cycle of their mortgage. And so we do have a business leader here at Freddie Mac, Donna Spencer, who is going to be leading that strategy. And she's already engaged with the counseling agencies and tech providers. And we have some amazing internal counseling teams that work in the front end. They've been doing this for years. They're award winning. And how do we pull that thread through and educate and work very closely with the homeowners? Because the average life cycle with a mortgage, with a servicer can be between 7, 15 years, sometimes over 20. Wow. So let's not only touch them with education during a hardship. Let's really expand the capabilities that exist today to borrowers that are current and build that muscle memory for them if anything should happen. So it is a vision. It's a goal. You'll hear us talking more about it. And I think it just speaks to the mission and why that's important to us. It's not just about getting people into homes. It's keeping them in their homes.
I love that. Sustainable homeownership, absolutely central to your vision and your mission. So Cecelia, thank you so much for being on today. Really insightful conversation, and I really appreciate it.
Thank you, Sarah. I appreciate it too.